The subject today then is using a stop loss versus not using a stop loss. Having one and not having one. In my mind, there's 4 ways you can trade the Forex market. In fact, not just the Forex market, but stocks, commodities, Bitcoin even, whatever you're trading. There's really 4 ways to trade. The first way is to use a take profit and stop loss. The second way is to use a take profit and not use a stop loss. The third way would be to use no take profit but use a stop loss. And the fourth way would be to have no take profit and no stop loss. People do trade this way. So they're the 4 main ways in which you can trade the Forex market. And there's so many varying thoughts on this. So many people have their own ways of trading and their own thoughts on how you should trade. For example, someone I saw recently, a YouTuber called Michael Norman, who actually I find his videos quite interesting. He's clearly a clever guy. He used to be a floor trader at Chicago and other floors as well for many years. I'm sure he's a very successful trader, but he is adamant, he is vehemently adamant that you must not use a stop loss. And yet in his video that I saw, he says that he has a limit of 7.5% per trade that he uses. In other words, he does have a limit or a stop loss. It's 7.5%. He just doesn't call it a stop loss. Probably what he does is you call it he uses what you would call a soft stop. That means that you won't set a stop loss per se, but when it gets to a certain point, you will close the trade manually. You will say in your mind, I have risked X amount in this trade, in his case 7.5%, and so he will close the trade manually. But at the end of the day, it's a stop loss. It's just that it's done slightly differently to most people. So what do I recommend when it comes to using a take profit and a stop loss? Well, I say that really you should use a stop loss, and ideally at least know where you want to take a profit. For me personally, I have, or you could ask yourself, what is your risk tolerance? How much are you prepared to risk on each and every trade? Now, of course, you can lower the lot size and extend your stop loss, but for me, whatever my lot size might be, that's pre-calculated before I enter the trade. But for me, my maximum risk that I'm prepared to lose is 50 pips. Sometimes it's half of that. Sometimes I'll have a stop loss of 25 pips or 30 pips. For me, that gives the trade quite a bit of wiggle room, if you like. The market can move, even if news comes out. It allows a bit of space for the market to move and for your trade to play out. I already have decided in my strategy which way the market is going. So if I am stopped out, my stop loss is hit, I am prepared and looking for getting back in the trade in the same direction I've just been stopped out at. But again, your strategy has to have fixed and hard rules, and you need to follow them consistently in order to be a profitable trader. For those who insist on not using a stop loss, maybe the way around it could be that when you hit a certain level, if your trade goes into profit, maybe you could set to break even. In fact, I do that myself. Once the trade goes a certain distance, I move my stop loss to break even. Maybe that is a way in which you could be happier in trading. But of course, if you haven't set a stop loss and the trade goes against you, then you could be in serious trouble. So finally, for those again who insist on not using a stop loss, let me just give you an example. One of the only traders I've had a personal dealing with is a guy called Gustavo Zapz. He runs a YouTube channel called Pipsology, and yes, you have to pay monthly to be in his group and to follow his trades. A couple of years ago I was in that group and I learned a lot from him. But he is the only genuine, regularly profitable trader that I have personally dealt with. The guy's from New York. He doesn't hold back in what he thinks, but he is, time and time again, his trades are absolutely outstanding. It's something I've never seen before. Week in, week out, his trades, are amazing, and he makes incredible profits. But guess what? The guy uses a stop loss. Surprise, surprise. For all the traders that you might hear on YouTube saying, oh, you'll take so many losses that you'll blow your account. It's a death by 1,000 cuts. Well, let me tell you that if you are even a half decent trader and you know the direction of the market, using a stop loss isn't really a big thing. If your strategy is tested and you know that it's mainly profitable, even having 4 or 5 losing trades in a row is not really much of a big deal. So he uses a stop loss. Gustavo Zapz, an amazing guy. If you ever get in touch with him, definitely worthwhile. But he uses a stop loss and then he sets it to break even after a certain period. So maybe the difference is that he can read the markets. He doesn't use indicators. He just uses trend lines, support and resistance. So that would be my recommendation to you. Certainly if you're a beginner at trading Forex, but even if you're not, use a stop loss, aim for a target to take profit, learn how to read the markets, whether you use an indicator to do that or not. Learn to read the markets, trust your strategy, back test it, and I'm sure that after you're going to get burnt every now and then, but once you've practiced your strategy by using a stop loss, which is my recommendation, you should be fine. Otherwise, for those who don't want to use a stop loss, that's fine too. It's your money at the end of the day. Maybe when you've blown a few accounts, you could re-watch this video and it might change your mind. Who knows? Anyway, thanks for listening. If you liked what you've just heard, please hit the subscribe button, the like button, the share button, the thumbs up button, the subscribe button, the like button, and every other thing. Apart from the thumbs down, don't hit that. Thanks for watching.